Today I want us to do some bit of practical training on how to place orders, especially now that one share trading is available on AIB DigiTrader. We'll also go through Dividend Calculator. Then we'll also go through Order Simulator so that you can practice before you place your order. So my name's Peter Chege. I'm Head of Product Development and Innovations at AIB Access Africa, a simulator that you can use to even determine how much you do need to get in, though it has not been updated to that level, but we'll see what is available currently. So it also allows everyone to join, even students, chamas, beginners, and low-income earners. So students, you can use your help to grow your portfolio. You can decide every day I will sacrifice my buy Safaricom shares. You can buy at least one share or two Safaricom and grow like that every month. By the time you're leaving campus, you have a small portfolio that can help you and now start investing when you get your job. For chamas, I don't think this rule would apply because it's members contributing. But you can decide as a chama, let's grow from somewhere. Then beginners, if you don't know and you don't understand the market, before you risk that huge amount, you can just use small amount to test and see how orders work. But I've come up with a trade simulator, which you can use to first learn how executions happen before you do the real execution on our app. Or then you run by doing. You can practice trading without risking big money. But remember, you're committing your money when you buy. So like a good example, for argument's sake, let's say Safaricom is costing 25. So you only need at least 25 shillings. Then you cut out commission. So with like 30 shillings, you would own one share of Safaricom. If it is Equity Bank, you only need like 40, 50. KCB, the same, less than 60 bob. So if you're saving that 60 every day, it's like you're buying one share of KCB every day. By the end of the month, you will have your 30 shares. Within a year, you have 300 shares just by buying small units. That's why I said, for me, I'm looking at it from one share to 12. Not you just buy one share and go. It won't help you. One share won't help you. As we'll see with Dividend Calculator, one share cannot help you. That's why it is one share to 12. So you can continue buying one share. Maybe you deposit every day, small amount. Then working days, you come and buy a number of shares that can be covered by that amount. But remember, don't keep on depositing and you're not buying. By the time you're buying, prices will have gone up. There's something called price cost average, where the price you're buying at daily and the total shares you have at the end of the month, if you do the average, the cost is lower than waiting to buy at the end. You deposit, then you buy as a single order where price will be higher. So you keep on buying. As prices move, adjust up and down, remember your average price is also readjusting. So you find at the end of the day, your average cost is lower than when you'd have waited to buy as a single order. Maybe you're keeping 50-50, then in hoping by the end of the month, you have 1,500, you use it. Now with one share, you don't need to wait. You can just deposit and buy. As prices keep on moving, remember your price will also adjust the average. So you find your average cost is lower. So we go to order types. Before we go to that, let me see if there's any question I can pick. What is your take on shares like FTG holding? Is there future hope for it in a personal view? FTG, Most of these companies, you may need to check whether they have any innovations they are doing, because that's what drives growth. And innovation is not about technology. They could also be starting another project. If they are doing it, it means that company is growing. Also, you also need to check their financial results when they are announcing. You check whether they are making profit. For me, instead of you investing in a frame tree, I would advise look for another counter that is giving dividend. Always look for dividend. Even if the broker doesn't tell you that explicitly, look for dividends. That's free money you are getting. And most of stocks which are giving dividend at NSE, you find they are also growth stocks. So for frame tree, I wouldn't advise for now because I've not seen any innovation they are doing, though the price is down. Maybe you would look at it in this aspect where you expect people who are buying one share would come and start buying frame tree because it's cheap. So it will drive the prices up. So you gain with capital gains. Immediately there is that huge price movement there, make gains, but it's not guaranteed. That's why I wouldn't advise on frame tree. Instead of these, you better go to the expensive shares, which you have an opportunity of earning dividend. Is there a guide on how to invest across international markets? Is that supposed via the app? We are yet to incorporate on the app. We are still in the development phase. Right now, it is going through our trading desk. In terms of guide, there are videos that I've done for the previous trainings. I usually do them on Friday. Wednesday is NSE. Fridays is international market. So you have different types of orders at NSE. One of them is a market order. Market order is either a buy or sell, which executes immediately at the best price. You don't quote a price. You're just telling the system, just go to the market. This is my buy order. I need 100 shares. Pick any available supply. So it will go and execute. It is quick, but then you might get execution at a higher price. The downside of market order is that if the quantity surpasses what is already on the top queue on the opposite side, it can clear everything. That's where now limit orders comes in, where you set your price and your order can only execute at that price if either demand or supply goes down or up to that price. So the order will only execute if market reaches your price. It's good for controlling costs, but it's not guaranteed unless you are matching now the opposite side. We'll see when we come to the app and also a simulator. Then you have market to limit order. Market to limit, it starts as a market order. So you are submitting an order telling the system, just go and pick me the best price, best top price. It's not like market. Market order will check your quantity. If the first queue is cleared and the order is not filled, it goes to the next one. Again, clears. If it's not full, clears the next one. You have the opportunity of clearing everything in the market. For market to limit, it goes to the first top price, either on the bid side if you're selling, or ask side if you're buying. Checks if the quantity can be filled. If quantity of your order cannot be filled, the balance is converted now to limit with that price. So market to limit doesn't clear everything. For market order, if still there is a balance and then there are no more orders, market order is cancelled. For limit, for market to limit, it's converted to a limit order and it is queued now as the top price. Then at the market, the limit orders, we have day orders. Day order is valid for just that trading day. If it's like today, it's valid from 9:30 a.m. to 3 p.m. Then it is cancelled automatically because you have only told the system this order is valid for 1 day. Then there is good till cancel and there is also good till date. You on your side, you have GTD, good till date. So you are saying my order will be in the system until a certain date. It's like now day order, but you have extended the number of days. Good till cancel means place my order there. It will still be there until I cancel. The system should not cancel. It's yet to come to photo and app. This is usually done on the NSE trading system. It used to be there some time back, but hopefully they can bring it back. Then there is immediate or cancel IOC. It says, when I submit my order, go and pick whatever is available, whatever you can fill in at my price. If you're not able to fill, cancel the balance. That is, let's say I have 1,000 shares and I want to buy at 20 shillings. In the market, the order that is there at 20 is 500 shares. So when I submit my 1,000, it is immediate or cancel. It will pick the 500, then the balance of 500 will not be queued, it will be cancelled. So usually it is used to control your orders. You don't want maybe your order to be there, then you get those small transactions. You want it immediately you submit, it cancels, or it executes, or it is cancelled. Then you can come later and submit order fresh. Then FOK, fill or kill. What that means, I'm submitting my order at this price. You either fill the full quantity. If you're not able to fill, don't execute anything, cancel. Remember, immediate or cancel, you are picking what is there, then the balance is cancelled. Fill or kill, you must get the 1,000. If you're not able to get, like now in the previous example, there is 500 already. Your order is 1,000. It will be cancelled because that 500 cannot fill your order. If, however, the supply was 1,000, 2,000, 5,000, there is already enough quantity to pick your order, so that one will execute in full. So that is the difference. So I want to go to the simulator first before we come to the app. So for the simulator, it is on this blog, under calculator, then order simulator. Let me share that link on the chat for those who may want to follow along. So that is a simulator link for those who may want to follow along with the presentation. Let me close this advert and move this up. Confirm you can see that screen with an NSE simulator. Confirm on the chat so that I know we are together. Just one person to just confirm. Okay. It's just a simple simulator, but it helps you before you submit the order. You know the consequences. So it has bids on one side and ask on one side. Like I said, orders are queued at different prices. When you get into NSE, you come with your price. Let's say you want to buy a share. Let's take an example. This one is Safaricom, which is trading at 100. You only need to do 10% rule. If you are buying, you got 10 points down. That is the range you can put your price. So let's say I want to buy shares. I have 3 choices. One is to get the shares immediately. That is, I buy from a willing seller. In this case, the sellers are the asker. So I would pick the top 103. It's there. The top willing seller. If I require 400 shares, I'll just put my order 400 shares at 103. I'll get those shares because there is somebody who is willing to sell to me at that price. Then the second decision is, yes, there is a supply at 103, but can I buy at a lower price than 103? That's where now 102, 101 comes in. Once you place your order at 101, it will be queued because there is also other people who are willing to buy at that price up to around 500 shares, but there is no willing seller at that price. So I'll be queued at that 101. But there is a likelihood my order can execute because there are also other sellers who will say, can I also sell at 101 because there is already demand. The other third scenario is where you still want to buy at a lower price, but you are not guaranteed. Now, from 100 going downwards, that order will stay in the market. Because, and I see the way it works, it's best price first, first in, first out. So best price, that is, if let's say a seller wants to sell to bid side, they'll be given the best price. That is the top bid, because they can't sell at a lower price. So 101, then at the 500, the first person who placed the order will get that execution. Now following that way. If 101 is cleared, now the next one will be 100, then 300, the same way the orders came in. If it is now on the sell side, the same thing. For buyers, they need to buy at the lowest price from the seller. So that's why 103 is the top. So when I say top price, I don't mean in terms of in ascending order. No. It's the best price for the opposite side. If it is bid, the best price is 103. If it is asked, the best price, because they are selling, they can't sell at 99. They will be losing that difference of around, is it 3 bob? So for sellers is the top price on the bid side. For the sellers, for the sellers is the top price on the bids. For the people who are buying, the best price is now the top, the lowest price for the ask. Hopefully it doesn't confuse you. But the way they are arranged on our digital platform, it's always the top prices. So for the bid is the top on the ask side. For the ask is the top price on the bid side. So those are the ones which will be given priority as long as there is somebody willing to buy and sell at your price. So now for an execution to happen, you may be wondering, if all of us then don't want to buy at 103, what happens? Remember, there are market orders. There's somebody who want to buy at market. It will come and pick 103 on the ask side. There's somebody who want to sell quickly. They will set a market order to bid side. They'll pick 101. There are also people who are watching the market and they decide, since the market is not moving and I need to sell my shares, why not put an order at 101? They just put a limit at 101 to sell, it will execute. Now, as I said, the risk nature of market orders. I want to buy 1,000 shares. I put 1,000 shares market. Remember, on the ask side, there is the top 400, 103. I'll clear that. My order is still not filled. I have 700 balance. It will go to the next one, 105. Pick the 300. Still, my order has a balance of 300. It will come again and pick 150 at 106. I've cleared everything. There is a balance of 150. Since it is a market order, it will be cancelled automatically for the balance. So I'll pick around 850, but at different prices. That's why when you submit a market order and you see different prices on your statement, you picked, you just submitted a market order and you surpassed the quantities at the top queue. Now for the limit, if I come and buying and I put 106 to buy 1,000 shares, again, I'm telling the system, go and pick me 1,000 shares at 106, but there is a lower price at 103. So it would start with 400, picks 103. Again, still, I said at 106, you go to the next one, 105, 300. My order is still not fully filled. It will come to 106 again, pick 150. The balance is now queued on the bid side as 106 on top for the 150. So that's why this screen for market depth on the app and portal is very important. Now for market to limit, if I submit 1,000 shares for market to limit to buy, it will come and pick 103 because that is the best price, 400. The balance 600 will not continue executing at other different prices. It will be queued now on the bid side with the price of 103. I want us to do that practical here down here. So Tikasebo, the share you're buying is the company you want to buy. These are just dummy data. It's not connected to NSE. Then quantity is usually the number of shares you want to buy. Let's say 1,000. Order type. we have talked about market. Executes immediately at best price and depending on quantity and may clear more prices. I've explained that. Limit, we have said, is where you put a price. Market to limit, starts as a market, then the remaining goes as a limit. Let's start with a market order. It doesn't allow you to put price because you are submitting to the market. If I click buy, I want you to take note of the 400, what will happen on the ask side. And I'm buying 1,000. We see whether I can clear everything. So if I click, it clears everything. That is the risky nature of market order. If you go down there, it explains everything. Market order fully executed at available book price. And you can see the best price because I've cleared everything. That is the risky nature of market orders. Let me refresh again. We see now the next type. Again, 1,000 shares, we go for limit. So for market, you have seen, you're not quoting any price. Let's do a market order. And this is dummy. Don't worry submitting the order. It's not connected to your account. You can practice with it. Notice I've only cleared the 100 out of 400. And you can see it down there at the best price. And it tells you the number of shares you have executed fully filled. But my order was 100. There was 400. So that's how you play with market order. For market order, always check the quantity that is available on the other side so that you don't clear everything. Otherwise, you might find your average cost goes high. I think I explained that in the introduction. Now, for the limit, it's where you specify a price. It allows you to specify a price here. Let's say I want to buy at 103 again, 100 shares. Let's put 1,000. 1,000 shares. We see the balance, how it is converted. Then we say day order is only valid for that day. So let me submit. Notice it picked the available 300 at 103. The balance was skewed on the bid side. So we pushed 101 down, then 103 is skewed at the top. So you can play around with it and observe what happens on this screen. I'll try and also add animation so that it is clear what is happening on the prices. Let's go to the next order type, which is good till date. Then you are supposed to select a date. Let's say up to 21st. Then the price here, I'll still leave it at 103. I'm buying 1,000. Watch what happens to the 700 on the bid side. So if I click buy, you see it is added on top of 700. If you go down to the explanation, there is no matching available price on the supply side. So the 1,000 has been added to the queue at 103 and will remain in force until that day. So this calculator helps you understand these terminologies so that you know when I'm submitting my order, what will happen to it before you go to the app. Remember, the app doesn't have these tutorials. Once you submit, you have submitted unless you have made your order. Let's go to the next order type, fill or kill. I want first to submit 1,000 at 105 to buy. Let's do a sale order at 103 for 2,000. Notice at 103, when I'm selling, I can only get 1,700. And fill or kill, we said, order must be fully filled immediately. So if I submit sell, notice nothing happens on the order queue. If you go to the explanation, order cannot be fully filled. Why? Because my order is 2,000. The available quantity is 1,700. And we said fill or kill. You are filling the whole order quantity 2,000, or you just cancel the balance. Let's try with IOC, immediate or cancel. Again, take note, it is 2,000 and we have 1,700. I submit a sale order. It has executed how much? The 2,000. The 1,700, sorry, it is here at Then the remaining balance is cancelled because we said what? It will take partial execution for immediate or cancel. It will pick what is there, the balance is cancelled. Let's try again at 101 to sell 2000. We see what happens. Submit. Again, it executes the 500. The balance is cancelled. So that's how you play around with this simulator, just to understand these terminologies before you go to the app and portal, because you'll find them. The only one you won't find in the app is market to limit. And I'll confirm with NSE why it is not added. So market to limit, we are saying, go to the market. Let's start with a buy order. I'll pick at 105, because once I buy as a market, it's supposed to pick at price 105, 300. We see the balance of, let me change the quantity to around 1500. We see what happens. So it's supposed to execute 300 at 105. Then the balance of 1200 will be converted on the bid side top. Let's submit a buy order. It's there. It will pick the 300, then the balance of 1200 is skewed on the left side where there are bids, and it explains what have just happened. That's how market to limit works. So this simulator just helps. It doesn't execute anything. It doesn't connect to your account. It's just a dummy site where you can play around with it. Don't even try to struggle. You have heard about the 10% rule. Let's see whether you can do that with it. As I am submitting at 10 shillings. If I try to buy, it will give you that pop-up. Price must be within NSE 10%. So you don't need to call a broker and ask why is my order being rejected. You just cross-check your price. So market is protected with 10% rule. 10% rule, that is opening price, you multiply by 10%. So the lowest price you can go is minus now that price you get. The highest you can go, you add now the 10% you have calculated. That is the highest you can go. And on the app and the portal, the range is usually shown for you. I want us to go to the app now. We do now the real trading. So as I have said, this is just for training. This is just for training, and I will add more, because now I also need to add where you can put the amount that now you have sent to the broker. You simulate the number of shares you can buy. So I want this to be like a simulator where you can train. Remember, brokers don't have a demo app for you to train, or demo platform for you to train. On the app, on the phone, it will open now the mobile version of it. So I'll try and add more fields, but for now you can use it now to run different types of orders. Let me stop sharing now. We go to the app. I want to log into the app platform. What I'm connecting now is real platform from AIB Access. Real platform where you can buy shares. Me unlock. So that is the app. Confirm you can see my screen, and it is the app. For those who are asking, I explained the screen. Now I want to explain directly from the app. Confirm you can see the app. Confirm you can see the app. Okay. So what you can see there is a refer and earn screen, where you refer your friend using that referral code, and you make some money. And as you can see, there is that 74 bob earned by Peter. But my account is not supposed to earn. Don't use that referral code, because you put me into trouble when opening account. I'm tied to staff policy. I'm not supposed to earn referral. But as you can see, you're earning 50% for the trades done by the person you have referred for 1 year. Calculated daily. So every day you see the figure changing here, but you won't see it in your statement until the following month, the first working day. That's when it is posted as a total. The first working day, the total you have earned, it will be posted there. Then the screen will go back to 0. Start calculating again for that month. Whatever you have earned is posted next month. So that is the first screen you get. Invested value is the amount you have used to buy shares inclusive of costs. So that value includes the cost you have incurred. Current value is value I can sell my shares at today if I was to sell. Then net gains or loss is the profit or loss that I can realize. But remember, current value doesn't have cost. Invested value have, so current value doesn't have because you have not sold. So even the net gains that you can see there always factor cost before selling. I won't go on the gainers, losers, and movers. Gainers is in terms of price, those which have moved up. Losers are the ones that prices are going down for today's session. Then movers is in terms of volume, the shares which have moved a huge volume. And I think there was a question on KCB. You can see it is a great mover today. But hopefully it's not because of the dividend, because then after dividend, what happens? So I've moved from dashboard to watch list, because this one I want to explain. Dashboard gives you the list of shares. That is the security code. The last price is the price that executed maybe a few minutes ago. The last execution that happened for any share, like ABSA, 1980, is the latest price that executed. When I got order entry, you see the details. Then there is high and low. Those, I think, they are self-explanatory. You can either swipe to the right or the left to call the order entry screen, but never do that. Why? You have not seen the prices. So the easiest way is to tap. Let's go to KCB. I think I can take that dividend. So you said we can buy one share. Let's go to KCB. Now you can see different prices. And there is the bid side and ask price. On the simulator, I've tried to simulate this screen so that it also looks familiar to you. And you can click view more to see more details down there. So let me click on view less. As I explained on the simulator, we have one side where there are buy orders and one side where there are sell orders. Like at 54, there is a quantity of 400. That is orders making up to 400. They are willing to buy at 54. Then at 53.75, there is around 63,000 or quantity. And people you queue at different prices, as you can see, all the way down. Then on supply side, it's people who are selling different orders at different prices. And as I explained, if you match, as a buyer, if you match the top price on the ask, you get the shares immediately. As a seller, you match the bid side, you get the orders, your execution immediately. If you place as a market order, you still get your orders, your order executed immediately. But again, remember the risks of clearing everything. If you put as market to limit, it will clear the top ones, the balance is then queued. I don't want to go into details, I've already explained. Then below that, I said last price, we saw last price, it goes with RTT last time. That is the last time there was execution. So we click on buy, because I don't have KCB shares. I click buy, so I'm buying. I've explained a few terminologies here, so you won't go through them. So the first one is security, is the share you are buying. Instrument type, you only have normal, so now you can buy any share. As you can see, I can place the order for one share. Lot size, one share, so there is no minimums. Limit market, limit is where you put a price. Like I can put it for 49.05. Let me go to the previous screen. We pick 54, so I buy at 54. So one share at 54, because that is my current price if I was to execute the trade right now. Then it is a limit. If it is a market, it will still go and execute at 54. Then validity is the number of days you want your order. It could be a day order, which is only valid for that day shown there. GTD, as I explained, is valid up to the number of days you put. If the order have not executed, it will stay in the market for those days. Either you come and cancel, amend, or the system cancels if the order is outside the price range, or it executes in between. I will leave it as a day. Then there is delivery and intraday. So delivery is where you are tied to T+3. If I buy today, I can only sell this KCB after 3 working days, now on the 4th day. That is the rule in the market. Intraday, however, I can buy today and sell today. I want to do intraday. Let me do delivery. Intraday, I don't intend to sell right now because of the cost. I will still be incurring some cost. So when you click buy, remember on the simulator, it doesn't do anything. On the app, it gives you the summation. There is the brokerage, that is the fee you pay for brokerage. Statutory is NSE, CDSE, CMA levies, transaction levies. Then there is investor protection fund, and there is also CDSE guarantee fund. Is also a makeup of this. Then the 2 shillings you can see here, 0.20 is those levies, the total. The 2 shillings extra is stamp duty. I said 2 shillings for every 10,000. That is by the tax man. That one we can't change. Then when I confirm my buy order, I think there's somebody who said they got an error run time. It happened maybe yesterday, because that's when we did this update. From today onwards, you should be able to buy 1 share. And let me show you where that 1 share is. If I go to dashboard, I get 2 notifications. If I click on the notification, there is order acceptance, some order submitted and acceptance. Let's see whether my order have executed. If we go to orders, it is still there at 54, 1 share. So if we go back to the watch list, we go to KCB, we want to confirm why it has not executed. Already 54 had, there was an order that executed. So among the 3 shares, there is my 1 share. So among these 3, my 1 share is there. So I'm not sure whether to amend it. Let me amend to 54.25. So I didn't want to execute. So for you to amend, you just come and click modify, then you change the price to a higher price. Instead of, because I'll get an execution, let me just show you how to cancel. But it is there in the market. Among the 3 shares, 1 is mine. So if you want to cancel the order, you just click cancel, then click cancel. That order will not execute because it will be removed. I want to confirm with you that my order is cancelled. So at a notification, you can see there is a cancellation. So everything you do, there is that notification. If you go to watch list for KCB, we should only have 2 shares unless the others which have come in. KCB, where is it? It's here. You can see now it has gone back to 2 shares because I've removed mine. So whatever you do on the app is real time. That's why if you're a beginner or you have never understood how market works, go to that simulator, play with it, understand what happens on the market depth when you place your order. Once you have a clear picture of what happens, come now and execute your trade confidently, knowing either you are getting the shares or you are queuing, waiting for prices to go down. So that's how you amend orders. I don't want to go to details of the other screens. For the orders, this is where you see all your orders. If you want to see all the orders, you just click all orders and you can see the status. Portfolio is where you see shares. We'll come to this when we are doing, we are checking break even. So you come to portfolio. Funds is where you can either deposit or withdraw. And it gives you a breakdown of your account. Ledger balance, mine is a negative. Just ignore it. It's the cash AIB have for you. So when you deposit, your ledger balance will go up. You only need to check whether you have a pending payment and pending by order. Because those ones, they broke those specific amounts so that you can't utilize to buy shares because we have to pay. If it is a pending buy order, we still have to pay for it. It means there is an order that have not executed. If you go to orders, you see a pending order. Working status is yes. If you have not released your payment, we will block because we still need to pay you. So the difference between ledger balance and now all these two is what makes up trading space. Trading space is what you can utilize to buy shares. So always check trading space. At the first trading space, the amount that is there is what you can utilize to buy shares. If you want to deposit, you just click on deposit. We have M-Pesa, which is fully automated. Just put your number, amount, click deposit. You get a PIN pop-up, put your PIN, automatically your credit reflects. However, you can do bank, and that is our bank account. So we have automated everything. If you have sold and you want to be paid, you just click withdraw, put the amount, and it will tell you up to what amount you can withdraw. Then you select EFT is a 2-day payment. M-Pesa is same-day payment because we have automated our process, but subject to our finance cross checks. RTGS is same-day payment to your bank, but subject to bank timelines. And you can put remark, then submit. So that's how you withdraw when you sell. The reason why EFT is a default is because you can make a mistake. You didn't want to withdraw. And M-Pesa is default. Once you click withdraw, on our side, we don't know whether you wanted to withdraw, you just release. If it is RTGS, we have paid to your bank. You don't have time to cancel. But for EFT, because you have today and tomorrow, early in the morning, if you didn't want to withdraw, you can cancel. That's why it is default. So when you are withdrawing, make sure you select the mode you want to withdraw with. So on the left side, you have several menus. Again, I won't go into details of these. We'll come to them next time. I wanted to first cover the order entry and how now different order types play with your cash. Otherwise, you might find you have over executed beyond the price that was there in the market. So use that simulator for your own practice. So you have seen the simulator and you have gone to the Live app, our DigiTrader app. Though there was no execution because immediately I execute, remember it is the amount I need to pay AIB. It's money I need to pay AIB. So we go to the next slide, dividends and dividend calculator. So we have said, when you buy one share, let me go back, you are creating your wealth by buying that one share daily. But you're not limited to one share, you can buy 1,000. It is your amount that dictates. What do I want to mean here? Don't go and buy one share and leave it there. One share will not help you. Price movement, even if you buy KCB at 50, when will it go to 100 for you to make that difference of 50? So one share will not help you. Dividend, it's at, is it 4 shillings per share? So 1 times 4, you only receive 4 shillings. Will it help you? So you are not growing yourself. For you to grow well, even if you have been told you can buy 1 share, this only helps you now to invest slowly. You can start buying 1 share from today up to December. You have those are 365 shares, if I'm not wrong, of KCB. Dividend, they declare 4 shillings. Already you have your 1,200 coming in as a dividend. So take it as not as a way to buy just 1 share and go, but a way to help you invest even with small amounts and grow your wealth. So how does the dividends work? Dividend is just a reward from a company that a company gives to its shareholders from its profit. So let's take an example. KCB, they made a profit. Their directors, they decide, their board, they decide, let's share this profit with our shareholders instead of reinvesting, because they can reinvest either way. The profit they make, they can decide to buy another branch somewhere. Instead of us buying that branch, let's just give this as a free cash to our shareholder. So they share that profit from the company with you. Remember, you are still a shareholder. You have not sold shares, so you are receiving free cash. That is dividend. KCB again, they made more profit than they anticipated. That difference between the profit they had projected and the profit they made, that extra cash, they also decided us also give it as a cash. So that's why they have a dividend and was it interim and special. That special dividend means that company made extraordinary profit. So you find the dividend was maybe split into 2 shillings for the interim and 2 shillings for special dividend. That's why it is 4. So they combined it as one, so that they don't have, the registrar doesn't have to pay you 2 payments. You're just paying as 1 payment. So board of directors, they announce a dividend. When they announce, that announcement includes book closure. That is the last day you need to have shares. The total shares you have that day is what qualifies for dividend payment. Then payment day is the day now you receive your payment. Always factor a few days ahead, because it depends on where they are sending, whether to bank, M-Pesa, or unfortunately, if you selected check, you receive as a check. That's why we always advise wait for 7 days, because they may have sent as a check. So book closure is the last day you need to have shares, the total you have. The following day is usually called ex-dividend date. So that day share is trading off the dividend. You find prices mostly they go down. So an example, if you have, let's say, shares from Equity Bank and they declare a dividend of 3 shillings, then you run a dividend of 100 times 3. So let's go first to dividend calculator. Then I will show you where you can get information from our website, from NSE price list. So again, okay, let me start with NSE price list so that you see how I've extracted that information into this calculator. So let me share that link. Let me share screen. So we'll go to our website, aibaccessafrica.com. Then under research, then you go to price list. Research, price list. Then you pick equities price list. If I zoom in and scroll down where there is corporate actions, so I'm just scrolling down to where the corporate actions, it is here. This is where dividends are announced by NSE. So price list under corporate action. So you have the company, the date they made the announcement. So they announced interim and special. So these 4 shillings have an interim and a special dividend. That declaration was done on 13th August when they did announce their results. And if you are trading and shares that day, you noticed KCB, you are not limited with 10% rule. So when every company is announcing results, that day is usually open day. You are not limited with 10% rule. And the book closure is 3rd September. That is the date you need to have shares. So you start buying from today onwards up to the 3rd September. The total you have on 3rd September is what qualifies for dividend. So the total shares times 4 shillings. That is the amount that you receive. And you receive it when? On the payment day. So that's how you interpret these. I've tried to make it simple for you through dividend calculator. It is here still on this website. You go to NSE dividend calculator. Let me share that link. If you're on mobile, it will open the mobile version. No? So I've tried to make it even mobile friendly for you, so that you don't need to scroll around the screen. I've shared that link. So if you scroll down, let me again collapse the advertisement. it has the upcoming dividends. So the first screen you get, it allows you to select the type of investor you are. When you opened account, you selected whether you are RI, RC, FI, FC, EI, EC. Meaning what? RI is local individual, RC is local company, FI is foreign individual, FC is foreign company, EI is East Africa individual, EC is East Africa company. So if you are Kenyan, you opened as RI unless it is a company. If it is a foreigner, either FI or EI. So your tax bracket matters. So if you are Kenyan, you just pick Kenyan 5%. That's what you pay as withholding tax. It is deducted by the registrar and paid directly to KRA. You don't need to declare. Then the list of stocks you can see here are the active dividends. This is the data that we have seen on NSE price list. So it has all the stocks. Once they close and pay, those stocks, they move from now the dividend calculator because you don't need to see them. The dividend have already moved. Let's pick KCB. You can see even book closes on 3rd September. Assuming I have shares, I only type the number of shares I have. If I don't have the shares and I want to buy KCB, I can decide, let me first check 1,000 shares, how much can they give me in form of dividend? Let's assume I had 1,000 and I want to add more. I can say, with my 1,000, if I was to make this 10,000, how much dividend can I get before I transact? Remember on our app and portal, in any other broker's app, you will never see where they are telling you, put the quantity, we tell you how much dividend you can qualify. That's why I made this calculator, just to make your work easy. If you click calculate, it calculates for you and gives you a breakdown. The stock is KCB. The way it is listed at NSE with the code. So this code KCB is what you use when you go to Apple portal to buy shares. Then it tells you the dividend per share. It's Kenya shillings. That we have put the number of shares to be 1,000. So if you multiply 10,000 times 4, you're supposed to get a dividend of 40,000. Book closure date is that September. Payment date, again, 11th November. If you scroll down, it gives you gross dividend. That is the number of shares, 10,000 times the dividend per share for Bob. It comes to 40,000. We selected ourselves as a Kenyan, 5%. So it does withholding tax with 5%. That 2,000 will be paid directly to KRA. Who pays? It's not you, it's not the broker, it's not NSE, CDSE, CME. It is a registrar for KCB. So they will deduct before they pay you. So you receive the net amount, 38,000, or else bank charges and M-Pesa. I also plan to add that for the M-Pesa charges, I think they keep on fluctuating. And bank charges for EFT, because it's sent as EFT, varies with the bank. Once I get that data, so that you, when you're calculating, you already know the exact amount that you are supposed to receive. However, if you change to a foreigner, again, your dividend changes. So that's why the investor type matters. So this works for both Kenyan and foreign investors, so that you know how much you receive. So the amount that you receive is that, the net amount. Then it goes ahead and tells you what to do with your shares. If you have shares, don't sell your shares on or before that date. Which date is that? That September. Book closure. We have said that day, the total you have is what qualifies for dividend. So if you sell, what happens? If you sell before or on that day, you miss the dividend. That's why it tells you to avoid missing the dividend. If you are buying, again, you buy from today up to and including that day. Why? The total you hold on that September will qualify for dividend. So that's a simple dividend calculator, and you can do for any other share. Like let's say Stanchart, I think they announced today. I've not added. Let's say it is Stanbic again. the same figure it calculates for you. If you go to, let's say, take Safaricom, books are closed. Let's see what it says. That is the amount you receive for dividend. Then books have already closed. They closed on 31st July. You can no longer buy this share to qualify for dividend. You can only maybe buy it to qualify for next year's dividend. And it tells you it is awaiting payment. So again, I'm coming to that screen. I don't want to scroll down, or let me just scroll down. Let me move to another counter because I don't want to preempt what is happening. We go to the investment. Like now for KCB, the next table tells you possible shares you can buy now using that dividend for KCB. Like now there is no the investment option. Why? Book closure is on 11th November. There is no share that have declared dividend. Book closure is after now the payment day for KCB. We'll come to that once we come to the investment. Then these are the upcoming dividends, the ones which have not closed books. There is the announcement date, book closure, and payment day. So if you are targeting dividends, you can get into this dividend calendar. You just check these active dividends. Then you check the price in the market and decide to buy. Remember now, or you can buy one share. So you can start building your portfolio slowly. Like BAT, you can buy up to and including 29th August. Again, if you see it here, BAT, you can come to the calculator and select the BAT. It is up there. Do your mathematics. It tells you what to do. And the dividend that you receive. Only that I have not added the price so that it gives you tentative amount that you can utilize to buy. But I'm still building it. But you are free to use it. If you go down there, it tells you the dividend, which have already closed and waiting payment. So it summarizes what you are reading here into a simple way. You can play around with it. So it is this data and the corporate action. You can see KCB, EABR, all those shares. Safaricom, you can see payment day is that book closure was 31st July. So it has already closed. So if you are interpreting this from NSE price list, you need to know book closure, what does it mean? Payment day, what does it mean? If I want to reinvest this dividend for Safaricom, payment day is on 31st August. So which share have declared book closure after 31st August? Now you start looking each and every stock. However, the calculator makes it simple for you. When you select Safaricom, you click calculate, it will give you this. I'm coming to this. Let me stop sharing. We go back to presentation. So that you understand, when I come back to that link, you understand what I mean with a dividend reinvestment. So using a dividend calculator, it helps you estimate how much you will earn. It's very simple. Number of shares times the dividend per share. Then less withholding tax. We have seen that. So you don't need to do manual calculation. The calculator does everything for you. It's fully automated. So dividend in investment strategy. Instead of withdrawing your dividend, that is when you receive dividend on your M-Pesa, don't withdraw and go have fun. If it comes to your bank, don't withdraw and go and buy maybe things that you don't need unless they are essentials. You can reinvest that dividend back to buy more shares. Remember, dividend is not sent to the broker, so you can't reinvest directly. You need to withdraw if it is from your bank. You deposit to our bank, or you send to through our pay bill. So it is you who receiving either on M-Pesa or bank. You need to deposit it back for you to be able to reinvest. So you deposit back and buy more shares, either for the same counter if you're doing reinvestment, or if you're doing dividend recycling, you buy another share to build your wealth. Remember, we are here to build wealth. So dividend reinvestment creates compounding effect because the amount that you have received, you have returned it back to buy more shares that will give you dividend. Let's say it is KCB. You get that dividend, return it back, buy more shares. They give you dividend next time. When you get that dividend, don't use it, return it back, buy more KCB. Again, you're adding to the total shares you have. So it's like you're creating compounding effect, using your dividend to buy future dividends. And that helps you grow bigger because now you own more shares without incurring additional cost on your side. You're not using your money in your pocket to buy those shares. You're just using that dividend. Unless you want to add more to top up and buy more shares. So you find in a few years, you have grown your portfolio to a very huge level. And that's how you grow wealth at NSE. Reinvesting your dividend, or you top up more money, buy more shares. There comes in dividend recycling or taking decision. When you receive your dividend, again, you have two decisions to make. Recycle. Remember the investment you are returning to buy the same stock. Recycling is where you put in and buy a different stock. And that's what I want to go to that calculator. We see dividend, reinvestment, and recycling, how you can do it. We did a dividend tracker worksheet. That video is already on my YouTube channel. I want to relate that because during that video, you are supposed to track manually. You go to NSE price list, feeding the Excel, then start analyzing manually as you invest and update. Now the calculator have made it simple for you. So when you receive dividend, you can decide to take it. That is, withdraw and enjoy that cash. But remember, you are reducing your chances of growing your wealth. So what do you do as a smart investor? Reinvest part of it, then use part of it maybe to enjoy or pay your bills. If you have extra cash, just invest the whole dividend. If you don't have, then use part of that dividend to pay your essential bills, then part of it reinvest back. Let's go back. I think after this, I only have 2 more slides. We wind up, I go to Q&A. Those ones I will just brush through. So let's go to dividend calculator and updating our dividend tracker. Let me share screen. So let me close this. Most of these items I'm showing you, they are not on AIB website. I've not done on AIB website. I've done off AIB. That's why these videos are on a different channel. So this is the tracker that I shared. Let me share the link for those who may not have had a chance to get it. You just make a copy. The way you make a copy, you go to File menu, you click Make a Copy. That will help you save as a copy on your drive. It will open a new sheet. So this sheet you can edit as and when you want. It is your worksheet, the one that you have made a copy. So let me go to the original one. The first one is a list of dividend stocks. There are those clients who ask, which are dividend stocks at NSE? These are the dividend stocks and when they declare, apart from HF. HF, I don't think this year they have declared. It is in the list, but ignore it. And also ignore Umeme, because Umeme, I think they have issues on their side, which they are resolving. Hopefully they can continue maybe distributing electricity, maybe outside Uganda, and maybe they continue being listed. But as long as they're in operation, it will still be listed at NSE. Remember, it is listed at Uganda. Yes, just close listing. So all these stocks are the ones that give dividend and the dates they give. Britam, I think the last time they gave was in 2020. So those ones ignore. Let me also highlight HF with red. Unless now they start giving dividend. But these are the dividend stocks at NSE. There are those which are strong dividend stocks and there are those which are weaker, depending on their dividend yield. And you can see the interim, the final, and if they give special, the times they give. If we are in August, I want us to confirm KCB. Where is it? I think it's the one I've highlighted. It is in August stroke September. So you can see the data is accurate. I used last year's dividend schedule. So I started from January all the way to December every day checking. Then I feed that data on this worksheet. But don't worry, I usually have a lot of time to do these things. So I did feed in, and it is free for you now to use. So you can use this now to track specific companies when they give dividends. And by that time, you can come to Dividend Calculator, check whether they have been added and the dividend they are giving. So we go to Dividend Selector. This is the one now I used to tell you. You pick the data from NSE price list and feed it here. You don't need to do this. Ignore that. We go to the investment. This is the sheet now I want us to feed in details. I will feed in from, let me highlight this because I want to split between previous session and this session, so that those people who are following up the previous video, they can see the top data. That is Umeme and Safaricom and Kapchorwa, for them to be able to follow that video. For this one, let me use a different color here. I can separate maybe with, let me pick that. So anything I do here is using calculator. Using calculator. Then let me add that link for calculator on this cell. So you just need to click on that link and it opens calculator for you. So we need to track on the left side, you know, the right side, that is on from A to G, you need to track your dividends. Why? There is nowhere in our platform or any broker, even an CDSC, you'll be able to track the dividends you are receiving. So you will never know whether you're making profit or loss in the market unless you factor out dividend. And how do you do it? Using a dividend tracker. So when you make a copy, make sure you clean up this data and you start afresh. Or you can create a caveat, then on the device you clear everything apart from where there is a formula. Let me see. On column G, don't clear because that's a formula. And also where there is total dividend, don't clear because those are formulas. That is cell D3, where there is 57,000. Then where there is 56,000, 1,300 column G, don't clear. Anything else on this side, you can clear all that. And feeding now with the data afresh. So let's go to the calculator. We are assuming we have Safaricom and you want to reinvest. Which shares can you buy next? So calculate. So first of all, we pick the data for Safaricom because we need to feed it in. Yeah? So what do we need? We need dates. So this date is the book closure. Let me just confirm that. I'm looking for ESCOM. Should be the payment day. This is the date you receive. So the date on column A is the date you receive your dividend. So let's go to the calculator. The date is this one, 31st August. So you come and feed in 31st August. Sorry. Let me copy, paste. So that's the date you receive your dividend. From which company? It is Safaricom. So you can copy this name. Then you paste it under the name. Let me expand that. Then dividend per share, Safaricom. Again, the calculator has everything. Just pick the figure. Your work is just to copy paste. Then we have book closure date. When did they close books? Again, This is for you to be able to track next time when Safaricom they're issuing dividend. When do you expect maybe book closure to come? And also to separate the dividends that you receive this year with the dividends that you receive next year. Let me copy this and come and paste here. Then we need the number of shares, assuming I had what? 10,000. So I'll come and put 10,000. So you need to drag this formula down. So make sure you drag your formula down. Huh? Let me remove these because they are not needed. So 6,500. The calculator is already automated. 6,500. So it gives you gross figure. You can always add additional fields. Huh? It's only that last time I didn't have much time to factor in. Now, factor in net. But if you want to track net, you can just copy net amount here and paste it. Because you want to track that amount that you receive. So the calculator have done everything for you. Let me first clear these two. Let me put this as 0, 0. As you can see on top, it gives you total dividend you have received so far. 6,175. If you continue adding other stocks, like let's say you have the next stock is Williamson, you do calculation, it's 9,500. You just come and add it down here below Safaricom. So you add all the stocks you have and the dividend that you receive and the date that you receive. Now, target shares is the stocks that you can use, you can buy using now Safaricom dividend. Again, that you don't need to go to NSE price list. If you scroll down here, possible investment option, it is giving you the stocks that you can buy. The stocks that will close their books after the payment day for, let's say, Williamson T dividend. Let me pick Safaricom because it's the one we are working on. Click calculate, it gives you the stocks. It is you as a client to decide which stocks can I pick. Again, you just copy. It requires what? Next target company. You can pick Stanbic. Feed it in on now the left side. Then book closure is when, again, it is in the calculator. Feed it in. It's target payment day. Again, you have the payment day. You're not calculating anything here. You're just copy pasting. Let me scroll a bit. Then estimated number of shares. So this one you can use, I would accept the calculator here so that it gives you, based on the dividend, how much you can, the number of shares you can buy. But this also will depend whether you want to do top up. Let's say it is 200 shares. 200 shares. So that when that day comes and you receive your dividend, that is on 31st August for Safaricom, you already you'll come now to your dividend tracker on the side of the target and check the company that you picked. So you'll go and buy shares for Stanbic using Safaricom dividend. Again, if you filled in now Williamson T, there's the company that you picked here, AIB reinvestment. You have already fed it. Sorry for that. Done this. You have already fed it in the next target company. So that way, you are using an Excel to track your dividends. First of all, because now you're feeding all the dividends on the left side, you can track even the total you have received for dividends. So you already know the profit you are making from your shares. Not just that, now on the right side, you're also targeting for every dividend, which stock do I buy next? If you want to buy multiple, again, you can just add. If let's say I would also want to buy KCB using the dividend for Safaricom, I can just come and copy KCB and feed it on the next row, paste. So I didn't copy, let me copy, then paste, then feed in the details for KCB. Then when I'm adding the next dividend here, I will skip the row for KCB so that I know Safaricom dividend is going to Stanbic and KCB. It's that simple. So that's how you use a tracker to track your dividend. Again, I insist, there is nowhere you can track dividend within broker platforms, even CDSC and SC. The only way you can track your dividend is to go to registrar. And for those who have gone to registrar, you know the story. You are returned back to the broker. The broker returns you back to the registrar. Instead of going through that hassle, just use a simple Excel, track your dividends. And you can even go further and add another field. I think I will keep on expanding this tracker. You add a field which denotes whether you have received that dividend or not. So that if you have not been paid, I'll be coming back to the calculator and add the details for registrars. So that with the calculator, once you do calculation here, it also gives you the details of registrar, whom you can follow up in case of unpaid dividend. So again, if you need more details, that's my number that you can see there on the calculator. Always reach out and ask any question you would want. So I've already made dividend calculator simple for you. I'm also trying to see if there is a way I can connect now that calculator with a Google Sheet, where your work is just to log into Google Sheet, you link it directly. So from the dividend calculator, you're just pushing information on the tracker. Hopefully that is hopefully it will be easy for me. But as I said, I have time to do all these things. So let's go next. Knowing your break-even point. What does this mean? When you buy shares, remember you don't just pay the share price. There are costs. There is a brokerage, CMA, CDSC. There is also NSC, which I may have missed, and stamp duty. There is also, I think those are the four, but CMA and NS, and that is CDSC and CMA, they have two additional levies, Investor Protection Fund and Guarantee Fund, but those are small cost. So there is also dividends. We have seen how you calculate dividends, which can help you reduce costs. So remember your break-even point is the price at which, if the price of a share goes up above your valuation average, you're either making profit or you're making, if it goes down, you're making loss. Let's go to the app. I show you that where you can get that faster. It's there on the portfolio valuation. I don't know why brokers decided to call it average price, but that is break-even point. Let me just log in and I will explain what it is from the app. So now we got portfolio valuation. As you can see, there is a security, that is the share. Quantity is the number of shares. As you can see, I've already, I think I forgot to cancel BAT last time. That's why I cancelled this time KCB so that it doesn't execute. As you can see, I can buy, I think there is that client who said they can't buy one share. This I bought yesterday using the app when I was testing that functionality. The second column is average price and then invested value. That average cost, average price is inclusive of your cost. So 444.65 is not the price I bought at. It's the price plus levies, and there is levies and the brokerage. So this is my break-even point. What does it mean? If BAT goes above 444.65, it goes to 450, I'm making profit. If it goes below it goes to 400, then I'm making losses if I sell. I hope that is clear. If you look now, like RTP, that is the last traded price, 443. These prices are real time from the market. Right now, my shares are below my break-even point for BAT. But if you look for CIC, it is 440. It is green. My break-even point is 341. It has gone to 440. So I've already made profit. What happens if I buy more BAT? It's 444. If we go to the watch list and we check the price for BAT, is it here? I removed it. So if you can't see share, you just click on the search, then you scroll to where it is, BAT, you click on the plus sign, then you click add to watch list. It is added. So notice it is 443. If I buy shares today and I got portfolio valuation, that average price will still change to another figure. So this break-even point is affected by the price you buy share at. That's why I said, don't put your money in a bank, then you say, after 1 month, I'll come and deposit as a total amount and buy shares. Your costs are still high. So your break-even point will be higher. But if you're buying frequently every day when prices are moving, they go down, you buy when it is low. Remember, your break-even point goes lower. There are clients who have asked before, and I avoided answering that question. If I buy more shares of this counter, that time it was Umeme, does my average cost go down? Will I make profit? Remember, Umeme, I can't tell you to buy because there are issues. If it was another counter, I would have said yes. So if in your portfolio valuation, you realize you have made losses, you can always average your losses. By buying the shares when the prices are down, your break-even point will go down. So when prices improve and go above that average price, you can sell at a profit. But remember, when you're doing all this, as I said, you have not factored dividend. So a good example, without dividend, if you buy Safaricom shares at 20, the broker fee, let's say, comes to around 0.24. Your total cost will be 20.24. It's what we are seeing on the app. That price is inclusive of the price you bought share at plus the costs. So your break-even price is now the total cost you have incurred to buy those shares. That is, you must sell above that price to make profit. That's what I explained in portfolio valuation. So always know your break-even point. Just go to your portfolio valuation, check average price. But remember, brokers have changed their systems. If you bought your shares through Apex 2019 going backward, you need to talk to us. We put the previous costs. If you are with the AIB before 2011, again, that's when we changed our system. We need to update previous prices. But if you bought now from 2019 to date, your shares have the correct valuation. So the average price you see there is your actual cost, and it is the break-even price. If you sell above that price, you are making profits. Now, an example with a dividend. Again, assuming the Safaricom pays a dividend of 1 shilling 0.2 per share. So your effective cost now again goes down. Remember, you paid 20.24. You need to factor dividend per share because dividend is money you received free. So you subtract the dividend per share. So your effective cost for that share is now becomes 1904. That is the cost you have paid. Which means what? If you are to make money, you sell above 1950. So the dividend is usually, you can use it now to caution against cost. And as I said, there is no way you can track dividend unless you are using Excel. That's why that Excel tracker is required so that you can factor all these out. So you'll be going, after you create Excel, next time I'll show you now how you can, we'll create a complete tracker with everything and how you can even track individual stocks so that you have dividend price or dividend per share that you can use to factor your cost. So before you sell, always compare the current market price versus your buy price plus your cost minus dividend. Remember, on portfolio valuation, it doesn't include dividend. That's why even profit you see there, that is shown there, is not the real profit, because first of all, you have not sold, you have not factored the cost of sale, and you have not also factored your dividend. So you have not sold, there is the cost of selling, also there is the dividend. You only realize that profit when you sell. So always factor dividend so that you know whether you're making money in NSE. Why? You could see loss posted on your vision, but your dividend clears out that loss. I hope that is clear. And if you have any question, put on the chat. We go to the last slide. Now, the difference between long-term and short-term holding. There are clients who have been asking these terminologies, what they mean, and whether there is a recommendation for long-term or for short-term. Short-term is where you buy low and sell when price rises. You take that quick profit. The risk are the market can dip before you sell, like what happened to Umeme. And most of these shares which have declared dividend, hopefully this one share trading can support that price and they remain stable. Otherwise, after book closure, you see them refactoring the dividend amount. Then from there, it is forces of demand and supply. So for short term is where you buy, like Safaricom, you buy when it is 20, you sell when it's 21, then the profit is that difference, but then factor out cost. Also remember your dividend. You always forget to count the dividend. That's why you hear investors saying, NSE, you can't make money, because they usually forget to factor dividend. However, long term is where you hold for years. And for me, I would not tell you to hold for years. It's when you pass to your beneficiaries. Invest for your kids, for your beneficiaries. At one point, share that wealth with them as their inheritance. I have done those videos on how you can do it. If you're waiting for the broker to do it for you when you're not there, when I say when you're not there, you know what I mean. You have passed away. It's a hassle. They have to go to court, get letters of administration, come present to the broker, then we act on court instructions. If it is possible, always share your wealth with your children when you are alive. You can share a portion, then the other one you just tell them this is what I want you to do after I'm gone. But don't share when you're still when you have not retired and maybe enjoyed your retire. First, enjoy that retirement with your dividends before you can share. Then share after that. When even them, they are maybe adults who know what they are doing with money. The worst thing you can do is to share your wealth with your children, then they sell those shares and misuse that money. But with the time, you can be gifting them. There is a way you can gift your children. You open a minor account. I've taken you through that. Then you can transfer shares from your account to them as a gift, or you put money in and buy shares. Yes, with the AIB, you can do that. If you have chama, you can open an account. If you need training as chama, just reach out to my WhatsApp number. I'll do it for you free. On the location you want, if it's far, we do online. It is you to decide on the preferred mode of training. If you have a company and you want to invest as an individual and as a company, you can do that. You open an individual account and a company account. If you are married and you want to invest with your wife, there is a spouse account, joint account. If you want to invest as yourself, your wife, so you have an individual wife, an individual, your children, and they have minor accounts. Then you have another account for your company. Then you decide for each child who is above 18, let me also invest jointly. Remember, for those ones, anyone above 18, you can open individual accounts. So those kids above 18, you can open an individual account for them. Again, you are investing for them. Then you open another joint account with them. So you spread your wealth across. So for long term, we always advise you invest on dividend stocks because you are just collecting that dividend and reinvest, hoping when you retire now those shares, because that time you don't have time to follow the market. Your work is just to wait for dividends to come in without doing anything. You have even forgotten you had a broker because the dividend is paid directly to you. That time you are concentrating now on maybe holidays using these dividends that are coming. And you invested that dividend when? From starting today by buying dividend stocks. When dividend come, you reinvest back. Then you start benefiting from the growth of your portfolio. Remember, if you're investing 10,000 every month, in December you have 120,000. In 10 years, you have 1 point something. I have not factored dividends. So in your retirement, let's say you are remaining with 10 years, you already have 1.2, you are retiring 2. And also those dividends which you have put in, maybe it averages to around 2 million by the time you are retiring. And you continue now enjoying that 2 million, not as a withdrawal from the broker, but the dividends that comes through it. Then that 2 million, you can share with your children as wealth. When you are sharing your wealth. And with that, I want to go to Q&A quickly. As I go to Q&A, for those who may want to get my WhatsApp number, it is there. Let me also share on the chat. 0723384775. For those who may want to write, it's 0723384775. Let me quickly go through the questions. And for those who are also experiencing issue, you can share a screenshot, but make sure it doesn't have your details. Make sure it doesn't have your details. So quickly, let me go through. Hopefully there are not many, but I think we still have time. Yeah. The last question was for the session I'm recording and I'll share that video. So don't worry. For the table, I think I've interpreted that. Online trading has 3 order options: market, limit, market to limit. Is it different from the app? The app, we only have a limit and market, but I will also check with NSE why it is not extended to the app. I think it's because of the risk market to limit poses on your side, but I'll check with the developer and also NSE why it was omitted. But it's not by design, maybe there are issues. How can one access simulator? I've already shared that link. Let me share again. And this is not a an AIB website. It's my blog where now I'm doing trainings. Remember, for brokers, we usually don't post training materials. That's why I started that blog, just to supplement what brokers give you. So I've shared again. And for those who are assisting in answering questions, maybe you can stop for now so that I don't struggle picking the questions which have not been answered. And I appreciate your assistance. The other question is, how do we read a company balance sheet, especially from bank and insurance companies, since many banks have reported their financial statements? For that, you only need, the only thing you need to read there is their profit, whether they are making any profits. So you check profit after tax. Then you check their debt level and also their liabilities, because then liabilities, it means they owe people. Then you also check their assets, because now assets and liability go together. For them to pay the people they owe, they would be required to sell their assets. So if they have more liability than assets, then that is a risky company. It means if they were to go into liquidation, their assets could not pay their debt, their debtors, which means what? Now it touches your shares. The amount that you invested, it touches on their share capital, which part of your money is part of it. So you check assets versus liability. That's the first thing you check before you buy. If assets are more than liability, then it means that's a company that can be able to pay their debtors. In case, like a case where, let's take a good example, Mumias, when it was shut because it couldn't make profits and pay its debtors. That's why it was suspended, because even selling the assets, it couldn't pay their debtors unless now they touch your shares, which means then you as a shareholder loses. And CMA, they are always there to protect you. That's why they suspended it from trading until they resolve their issues. So the next thing is profit after tax, because that determines whether they can give you dividend. But most of these stocks, they don't give dividend in form of cash. They might reinvest that dividend. Those stocks are called growth stocks. That is, the company reinvests this profit for growth, then the price appreciates. So you gain by selling at a higher price, which is called capital gains. If you sell at a loss, it is called capital loss. So profit after tax may determine whether the company will give profit and whether it is growing. Because if they are making losses, then you can compare performance between the declared results, the last results, if it was final or interim, then the previous year's results to see how the company is growing. So those are some of the items you check. But there are many other factors you check. It's only that I wouldn't want to go into details. We would take another 2 hours. But as an investor, always first check asset versus liability and their debt level. Always check the debt level. Because again, even if assets can pay the debtors, if they have debts with the loans they have taken with other institutions and they are not able to pay using their assets, then they touch on their capital, which means your shares might be touched. And it also, if they have been making losses, then it is a company that is struggling. You don't want to get your money in there. Remember, as a shareholder, what you are doing. A company lists through IPO. It says we want to add more money in our company. Maybe we invest in an AI infrastructure. Let's say it is Safaricom. Or if it is Eveready, they want to invest in electric vehicles, maybe chargeable wall clocks, because I think that's where they are, or chargeable remotes, because those are the only products that are supporting Eveready. Or if it is from the people who are in up country, they use the radios which use Eveready batteries. Those are the only things I see supporting Eveready. Wall clocks, remotes for TV, and then those radios that don't use electricity. So if they were able to innovate and maybe they start coming up with a chargeable remote, chargeable maybe wall clock, even lights, they start competing with these companies which have solar, then they are bringing in their own product. They may come and decide, we want more money from investors. Remember, they are not putting in their money. At that point, you as investor, you're giving that money to that company. So during IPO, you give money to, say, Safaricom. They go and do whatever they wanted to do with that money. If you want your money back, ideally, you would go to Safaricom and tell them, I need my money. So they need to stop whatever they were doing to pay you. That's why they list at NSE. So that if you as a shareholder, you want to get out, there's somebody else who want to become a shareholder, they buy your shareholding, the one that you want to offload. So they become a part of shareholder. That money doesn't get paid to Safaricom, they pay you as the seller who want to get out. So Safaricom continues to use their money. That's why there is buying and selling shares. One entity wants to get out, remember the company can't pay you. So the person who wants to get in as a shareholder will pay you, but you transfer that shareholding to them. So if you fraud everything, you stop becoming a shareholder. If you cede part of your shareholding, then you're losing that percentage. But it doesn't affect you. It only affects if there is dividend, because then even your dividend, because you're selling portion of your shares. So that's why you need to know the debt level of a company, the loans they own, because it is your shares they can use to pay that loan. No? But I don't think during listing there are rules. They have to follow from CMA. That's why most of them, they are suspended. If they have to be delisted, they make sure they refund the shareholders. And it is always communicated by the regulator. So your investment at NSE is usually protected by CMA. So when do we expect dividend to be paid directly to CDSC trading account rather than settlement account? We are still working with the regulator and CDSC because you see that is done by the regulator. It means broker talking to all the registrars, they pay to your CDSC account. It's a hassle, and it's because not all registrars have the same thinking where dividend can come to us. Again, even CDSC, they always have their own pushback. So until we agree, that's the only time it can be sent to us. For us, we are ready. We have talked to a few. One of them is the image registrar. They are very good. Image registrar. If you have ever had any issue with your dividend that is managed by image, I know you have never, you are usually sorted on time. Huh? For them, they are always ready to assist. But remember, you can't do for one registrar. You have to do for every registrar. That is the hassle we have. But we'll talk to them and see how we can resolve that. Huh? Is the quantity shares? I believe you're asking in respect to the number of shares I put. So quantity is number of shares you are buying. Huh? Quantity, number of shares you are buying. If you cancel the order, do you still incur charges? There is no charges. When you place an order and it has not executed, we broke that amount. We don't debit. It's the same way when you go to a bank with a check and you deposit. They show you the available balance and there's the actual balance. There's usually the amount that is less than the other. It's the same thing we do on our side. You have the cash that you can utilize. It is there intact in your statement, but you have placed an order. It has not executed. If it executes, we have to pay NSE. That is CDSC, they pay the person who is selling to you. We just put that broke for that amount, but we don't debit. It will stay there until your order is either executed or you cancel or it expires. Once it expires, there is nothing that happens to your cash. You are not charged. You're only charged on an executed trade, and it is on the amount that is prescribed by the CMA. Broker commission, NSE, CMA, CDSC levies, stamp duty, and now the net amount that you're paying out. Deleting stock. Let me see whether I'm still connected on the app. But when you're deleting, also remember to know how to add. The reason why I'm saying this, we had a case where we were reported to CMA that our platform doesn't allow the client to buy shares. Yet it is the client who deleted. So when you delete, also know how to add so that you don't go and say it's the broker. The broker, remember the broker will actually argue the case based on what they have. So we don't want to find ourselves in a scenario where you may have deleted by mistake, and maybe you don't know how to add. So to delete on the app, on the portal is easy. You just click on the delete icon. If you want to add, you go to add script. So on the app, if I want to delete, let's say BOC, I will wrong press where it says my watch list 1, my watch list 2. So that title is what I will wrong press. I put my finger there and hold. There you have. Just click on the delete icon. It is removed. Then you click save. It has gone. If I want to add, I click where it says search and add. BOC where it is, it has a plus sign. So I just click on it, it ticks, then I save. So that's how you add and remove. Hopefully it is clear. If it is not clear, reach out on WhatsApp. I'll take you through. So you only need to call me on WhatsApp. There is a way you can share screen these days on WhatsApp. Then I can take you through. The bid and offer quantity in the watch list is actual or in terms of millions. It's actual. What you see there is actual. Even prices. It's not. It's not like the way in the balance sheet where we report maybe 1.1, but in top we say it's billions. No, what you see there is the actual. If it is 1,000, it is 1,000 shares. If it is price, it's 1, it is 1. So if you are reading, if the bid reads 30, it is 30, the exact 30. If offer is 300, it is 300. It's not 300, then on top we are saying it's in millions. No, we are dealing with Kenya shillings. What you see there is the actual numbers. In scenario where pending settlement is +1 and the trading space is +100 and I happen to execute a buy option, are there any other charges incurred on my head bearing in mind actual balance is somehow? What usually happens when you buy shares, there is the T+3 rule. So what you see as a pending settlement, it means that amount have not been paid to CDSE, but it doesn't block you. What you can't do is where there is a pending buy order or pending payment. For pending settlement, it means you just bought shares within 3 days, we have not paid to CDSE. So that amount you see at the pending settlement will be paid to CDSE. If it is money in, it means we have not received that money yet. So pending settlement, if it was a buy order, we have not paid. If it is a sale order, we have not received. That does not affect your trading space. Because on our side, when you sell, we give you credit immediately to buy more shares. Only that you can't request to be paid the same day unless you are requesting a payment. Then there are no other charges. Our charges are open. When you are placing trade, it's commissions and now the levies. Then there is annual maintenance fee, 200 shillings. And now when you are transferring from bank or M-Pesa to be paid, those are charges outside the AIB. No other charge in AIB. When you bought shares at 38.50 and now is that 8.50, is it advisable to sell yet? You want to buy more? What is the best approach? Remember, when you buy shares, there is a cost. So if I bought at that 8.50, it will not show me as that 8.50. It will show now with cost. Let's say around 39.10. So if I'm still selling at that 8.50, I'm making loss because there is that cost I paid to buy those shares, and there's the cost I'm paying to sell those shares. So I'll be selling at a loss. It's not advisable to sell. If you don't need money urgently, buy shares and forget about them. Even if market is moving, buy shares that are giving you dividend, forget about them. You continue adding, continue buying until the time that you need money, maybe on emergency. Come and check which shares have given me profit. Are in green, sell those ones. Don't sell the ones in loss. Then when you get money in future, come and buy back those shares. Remember, we are building wealth. I usually don't advise on capital gains because we forget taxes, charges. Where you buy low, sell high. Remember there are charges you are paying. You might forget to factor out and you end up making losses. Always, when you come to NSE, think it like a savings account where you're putting your money, it grows. If you sell on 4th, will you get dividend? This is on which share? Let me check Dividend Calculator. It could be Safaricom. Let me just check which share is this. If it is KCB, book closure is that September. You can sell from 4th onwards. But remember, as I said, on X dividend date, which is 4th, prices dip. You might sell at a loss. Instead of doing that, I would advise you buy when prices are low. One day, that book closure date, take the price, compare the profit you can make against the dividend that you are receiving. If the profit is more, you can sell that day. You seed dividend. You don't get dividend, but you get capital gains. So here you go to your portfolio valuation, check KCB. Have I made enough profit? What is profit shown there? Factor out selling cost. Then go to dividend calculator, calculate your dividend. Compare the net amount of dividend against your selling amount, the amount that you receive, the net amount. If selling gives you higher amount, you can sell. Then the following day when prices dip, buy back. But please, when you're playing with that, be very careful. Prices might move the next day to your disadvantage. Do stock compound? Do stocks compound? I don't understand the question, but I hope you're asking whether they have that compounding effect, unless you are reinvesting dividends. Remember, your stocks value is the shares you have times the current price. There's no compounding. And unless you sell, you can't realize those gains. Even if you sit in green, you have to sell to realize that green. What does it mean when a company is offering bonus shares? Bonus shares means instead of company paying you that dividend in form of cash, they reinvest that money but give you additional shares for free. So, like Williamson, they had given a dividend. Instead of giving special dividend like KCB, see, they have already given you dividend. That extra profit, they decided, let's invest again on other projects, but give our shareholder, for every one share they have, they get an extra one share for free without buying from the market. So that's what bonuses mean. It's dividend in form of shares, but company reinvest that money back. Where do you see these dividend corridors? This you have to do manually. That's why I've created that dividend corridor. That link I've shared. That's why I'm creating it. Now from that link, you have the dividends. I will also be adding lists of registrars so that you don't need to call broker when you have any issue. You just need to contact the registrar. So I'm creating for every company. I will also now from these start creating list of dividend stocks, strong dividend stocks, and weak dividend stocks, so that you, when you're investing, you know which you want to, where you want to put your money. What stocks are a must to have in the next 5 to 10 years based on your perspective and experience? Not financial advice, of course. Okay, hopefully I will not be quoted, but banking stocks. Oh yes, the banking stocks, just go there. Banks, unless there is an issue affecting maybe loans, banks are always there for profit. And I said, apart from HFCK, housing finance, all the rest I've seen they are giving dividend. So banking sector is always stable. They're only affected when interest rates go down, but again, they also have other products that support them. Who doesn't keep money in the bank? Even if there is M-Pesa, most people have a bank account. And when I say most people, I'm saying middle income earners and above. Most of them, they have bank accounts. Because payroll go through banks. So that's why banks are stable. Also Safaricom because of M-Pesa, of course. And hopefully Safaricom can start picking the innovations on AI. We start seeing some things from them. So most of those, then I think those are the ones I would recommend you for now, but you can also check our stock recommendations. But bank stocks, Safaricom, those ones, I think they are stable. Also Williamson, Kapchorwa, I think everybody is consuming tea. So that's how you check companies before you invest. What do they do? Who supports them? Safaricom is supported by M-Pesa. Unless we get another competitor who offers M-Pesa, even if you say we are giving free data, unless you compete on M-Pesa side, Safaricom is a strong counter. Banks have said those ones, it's like a big bet. Then Williamson, Kapchorwa. For the others, I may not be able to tell you now. KC, there's KPLC, Kengen. Those ones, with politics, anything can happen. So I just gave you companies that I know politics can't affect them directly, unless people have personal interest. My investment is valued that current value is net loss or gain. What does it mean? So it means you used 91,000 to buy. No, okay. Invested value is 91,000. That is the amount you have used to buy those shares, inclusive of the cost you have paid. Current value is the amount you can realize if you are to sell. That is, you gave us 91,000. If you are to sell, you'd receive 128, but again, factor cost of sale. Then net profit or loss is 4,000. It means if you are to sell today, you'd realize 4,000 as a profit. Because that is the profit you have made, but it is not realized until you sell. But remember, there are costs. So don't sell, you continue investing. I suspect you have invested in good stocks. 4,000 is not an easy amount to make with that investment. Those are good stocks, and I would advise if you can even add more, the better, but don't sell. Don't be tempted by 4,000 to sell. Remember, if they are dividend stocks, now these 4,000 come and add dividend. If you have received dividend, keep on adding. Now that is tentative profit you have. List of dividend stocks on the chart. I'm not sure whether I can be able to copy that from that spreadsheet. But let me see, because it might hang when pasting. At the end, I will post it. Edith, don't go. Cooperative price that. Maybe this one, I'm not sure whether it is a question, Clara. But cooperative, it means the average price. That is the cost you have incurred to buy those shares. Your break-even point is 15.26. If co-op goes above, if you're like now, the current value is 17.25. It means the current value have gone above your break-even point. Remember what we said in the previous slide. Break-even point is your total cost you have incurred to buy that share, which is the average price. So if current price goes above, it means you're in profit. If you look at Centum, yeah, that could be at a loss because average is at 16, current value is 11. So your current value is below your break-even point. So if Centum keeps on improving in price from 11.20 and it goes above 16.05, then you are in profit. So that's how you play around with it. For DTK, it is 0.0 because maybe you got these shares through through rights issue. If it's not rights issue, you transferred from a broker or you bought when before you migrated to the new system. You need to talk to us, we check so that we can put that average price, the correct figure that you're supposed to be shown. But that's how now you interpret your portfolio. Oh, no pictures, reasoning only. Maybe it's because of network, but I'll share this video on my YouTube channel. Let me first share that so that for those who have not subscribed, you can subscribe. But if you don't want to subscribe, you can share you can save the link. When I post videos, you can just be checking. I'll also share the link to my WhatsApp channel. Sorry, I forgot to do this earlier. So that is a channel. That's actually the playlist I use. For those who are reaching out on WhatsApp, I will reach after this. It's my WhatsApp number. Let me copy. That's WhatsApp channel. So you can follow. That's why it's a channel. It's not a group. You can just follow. I don't want to create so many groups. But you can let me know if you want me to create a group where now we can make these discussions on WhatsApp. Last time there was interest, but I'll see if I can create that. I also don't want to compete with the AIB. By the way, for paper trading, you can also use, okay, this one I may not be sure of. Paper trading. Okay, but it's not related to our training today. Can't see your screen. I think I shared that. Investment, NSE investment charge. Okay, that's for practice. Can I save this dividend tracker? Yes. Just go to file menu. You got to make a copy. Whatever now you save is yours. I don't have control over it. That's why on the link I've shared, you can't edit because I've limited on my side so that we don't change all of us. Then you're not able to follow up when you're doing, you're following up on the previous videos. But oh yes, just go to file menu, make a copy. Eveready, I've not been in the market to see what is happening, but if it is price movement, then it is one share trading that is moving the prices. So don't be excited because once people know Eveready doesn't give dividends, they will again start selling, price starts going down. I want to see, actually it is going down. There is more supply than demand. I think that's what you're asking. Let me share that screen. Hopefully I'm not taking much of your time, but the rest of the questions I'll try to rush through. For Eveready, you can see there is a supply, but there is no bid. Demand. If you are to click buy button, you can only go the lowest price you can put. You can see at the price is 1.21. I hope you can see that at the price, the range 1.21 to 147. We go back. We see supply whether they have broke the demand. That's what they have done. So for today, the people who are buying, they are subjected to buy at the selling price without any option. You can't put any other price. It happens when the sellers are more than the buyers. And as I said, you saw when I went to the simulator and I pressed the order and I cleared one side. I suspect this could be somebody who placed an order, maybe a market to limit at and maybe that time there was only order the lowest price to buy at a lowest price. So it cleared, the balance was skewed on the supply side. So these are some of the risks of the order type. As you can see, 121, there is a difference between of around 0.4. That could be the reason. No? But again, it looks like people panicked. They start selling. Huh? So it is blocked for today. You are subjected to that price of 121 if you have to buy. You don't have any other option. Huh? It's not market malpractice. It's the way market is set by NSE. If you tried to follow up with the registrar and there is no much help, just reach out to me. Let me know it is which registrar in the shares. Huh? I think last time it happened with Umeme, where clients would call Umeme Kenya. That is the registrar in Kenya, CNR group. Huh? Then you are transferred to Uganda. For the Kenyan party, I think they have been supportive. Then when you go to Uganda, then you are stuck. We reached out to them. Apparently, for registrars, you have to call because they have to authenticate who you are. The easiest way is through a call. Explain everything to them. If you have not received dividend, tell them the reason. So always first start with the broker. Know the mode of dividend the broker have set in CDSC. Once you have that, call registrar. Explain to them you have not received. This is your mode of dividend. If there is an issue, let's say there was a number that was missed, maybe in the mobile number or a bank account, you only need to send them an email with the right number, your ID copy, and also the correct number that they are supposed to pay to. If possible, also attach your M-Pesa statement that shows that number. Remember, they don't know you. It could be a fraud. That's why for registrars, they are a bit sensitive, but reach out to me on WhatsApp. Huh? I will try as much as I can to help you. I have not received my dividends from some shares I bought with a broker, which is now dormant. How do I follow up? Again, that is with the registrar. Just pick the shares that you have not been paid. Go to our Telegram channel. Our Telegram group, not Telegram channel. It's there on our website. Let me just share that link. On AIB Telegram channel, we have pinned the list of registrars. Just reach out to them. If they are not able to help you, you may need to go through your broker. Hopefully your broker have that service. They should be able to reach out to the registrar and maybe try and get their side of story. But just reach out on the registrars. You don't need to activate your account anywhere. CDSC accounts, they are not dormant. The dormant account are on the broker side. Yeah? So reach out. First know the mode of dividend. Confirm it is correct. Then call registrars. You can send them email. Make sure you detail that email completely, including giving them the new mode of dividend you want them to send to you. The easiest way, write a letter, handwritten, or you type, make sure you sign. You sign, then you scan. Write an email and send that letter. It will make your work easy. As I said, for registrars, they are sensitive because of fraud. I have a brokerage account. How do I start trading? You just fund your account. Then you go to the screen that I had shown you how to place the order and you execute your trade. If you are stuck, reach out to me on WhatsApp. Explain the negative and positive of positive in the portfolio. Negative means you are at a loss or the prices are going down. Positive means it's going up or you're in profit. So if it is the net gain or loss, if it is negative, you are loss. But you have not realized that loss because you have not sold. If it is positive, then you have made some gains, but until you sell. But don't sell if it is not, you don't need that money. So for negative, loss, positive, gain, but not realized gain. Situation for Umeme, we are just waiting for the court case. They are still following some money. If they are able to get that, then they will also be giving direction. Umeme have not delisted. I think they are still tendering out for in other countries. Does average price factor inflation? Shares are not affected by inflation. Because these are just numbers. Market prices are never affected by inflation unless inflation affects that company directly or affects you as an investor. But average price is only the cost, the brokerage, the levies, and stamp duty. Those are the ones which are supposed to affect your average price, and also number of shares. Because remember, you keep on buying, and also the price, because they're also buying at different prices. Those are the things that affect average price. Price of the shares, number of shares, and the cost, brokerage, and the levies. If you transfer shares to AIB from a different broker, how do you know the average price? Again, those ones now you need to give us that average price from the other broker. Usually, when you're transferring, get portfolio valuation from that broker. The last day you're transferring, because that average price is what we'll put on our side. If possible, even after you have transferred, the broker still have your valuation at some point. Just ask them. That's why on our side we have automated statement and portfolio valuation, so that even if you transfer from AIB, you still have a portfolio valuation on your email to refer to. You can request your broker to share, then you share that with us, we'll update. What about KQ Airways inakuanga chini? Mostly it's because those days they were making losses. And you know, losses trigger investors to think this is not a profitable company. So they want to sell, prices go down. But remember again, it is you who is supposed to support these companies. If you're investing in KQ, why then use Jabojet? You're supporting Jabojet by paying fair instead of KQ. So KQ is still making losses. So as investor, the company you have invested in, never be told by anyone to boycott or not to use it. It affects you directly as an investor. So for KQ, it's because of the losses they have made, but I think they are starting to realize profits. And hopefully, those losses were not politically instigated, because then, you know, this market, even politics play. So for KQ, I think now you understand where the issue is. If this is on iOS, basically you can't buy. I've seen. This is a new account. You have not funded, if I'm not wrong. Fund watch list. Yes. You may have failed to put the minimum 3,000 to activate. Just confirm. If you had put up to 3,000, just give it 2 hours. That process is automated. It's not a process I can override on my side. You just give it like 2 hours, it will automatically show the other icons. If, however, you have been using this app before and it was working, just uninstall, reinstall again. If the issue still persists, send me a WhatsApp message. But those could be the likely scenario. It's a new account, you have not put some money in, or there is an issue with the app itself. Yeah, maybe those two. Just try to uninstall, also clear data on the app settings, and also confirm you have put the first 3,000. It is your money, it's not our money. You're just activating account, then use it. After that, you can put any amount you want. Subject to the mode you're using. If it is M-Pesa, I think there is a limit. Is it? Can you send 1 shilling with to pay bill? I believe so. So after the first 3,000, subsequent deposits, there is no minimum. Is there a max of shares you can have no, that is determined by the amount that you have as a client, the amount you want to buy. But again, it also depends on the number of shares that are available in the market. Tried buying old lots, but it keeps saying time error. Please update the app. You have seen I can buy one share. Please update the app. iOS, we are still working on it. If you're using iPhone, because for the approvals in that app store takes some time. Email for registrar, I would kindly request if you can check on that Telegram channel for AIB. I've shared that link. Also check on our website at the downloads, whether there is a list of registrars. But I will also update now the dividend calendar with for each company with its respective registrar. Hopes for Mumias being revived, that depends on the politics of Western. If they remove politics, then yes. Mumias is usually politics. And also counterbad sugar. It comes, it is flooded, it becomes expensive. Again, you find people from Mumias, they don't want to take sugarcane to Mumias, then it can't operate. If those can be resolved, then Mumias can come back. But it seems I suspect there could be a court case because some of these things are the ones which also delay these companies from coming back. But you don't need to worry. CMA, in case of anything, CMA will always give guidelines on what to do. I've tried to buy one share. I think I did that, Kevin, here. Just update the app. I suspect you have not updated the app. As I said, we updated yesterday, so today there is an update. Make sure you update. NSC have no bidding price. What does that mean? Again, it could also be blocked for today. Usually that's what happens. Let me just check. If there is no bid side, it means the price you can see there is the lowest you can put, and the ask price have gone to that. So for that, it's either you buy at that price, or you buy at the current selling price that is shown there, or you wait for tomorrow if you want a lower price than that. Let me just see. Actually, it is now for NSC, it is the other way. It is the buying side which have blocked the selling side. So they have taken the top, the highest price sellers can put. So remember, you can't go outside 10% rule. So the sellers, they are subjected to 13.25. It's not market malpractice. It is us, the investors, who decided in the morning that let's come and block one side by putting high prices. Then the sellers, they decided let us withhold the shares. So you blocked the order board, meaning sellers are subjected to the buyer's top price. It's not market malpractice, but it has potential pushing prices up. Like I can see it is starting to go up. Would like to know where to get information on closer. This one I'm not quite sure what you mean, but if it is on dividends, it's there on that dividend calculator. Sorry. What does it mean when a company is offering bonus shares? This one I've explained. Sorry if I missed this. If I already invested over time as an individual and now want to open a company, is it possible to transfer shares to the company? That you can only do by gifting your company. I'm not sure whether that is allowed at CDSC, but you can talk to our team. You are gifting from your account because you're gifting somebody else. Your company is a different entity from you at CDSC, so you're gifting that company. Would that be recommended? I wouldn't recommend. Yeah, because there might be some charges at CDSC you will incur. It's better you buy from the market. So you're investing as an individual and also as a company. HFCK, is it a good buy? For this one, I may not advise for now, but there are politics. There is already a court case. Huh? It's not HFCK. Sorry, it was Kenya Pipeline. Huh? For HFCK, again, there are politics if you can lead them through. If you can lead them through. There is a majority, what are they called in parliament? I don't want to say his name. The one from the government side. And there is also, is it Antonio Mwaula? They were disclosed as some of the interested parties. So for me, HFCK, I wouldn't bet with it for now, because you never know about tomorrow, but they could be eyeing for housing, these affordable housing projects. So maybe for me, I would advise you first hold and wait and see the direction they take. You don't commit your money, then you lose. Opinion on Sassini? This one I may not be able to give you right now. Maybe I can quickly go through the other question. How is this calculated? That is then, for invested value, we pick the price you charge, the cost you pay. Cost you pay, that is the total number of shares you have. You multiply by, sorry, I hope you're asking how net gains and losses are calculated, because net gain or loss is your current value minus invested value. But remember, for us, we work backwards from their current purchases backward to where now the total shares you have, where they reach, we assume if you have already sold in between, you sold what you started with, not the current. So in terms of calculation, we start with current transactions working backward until the total purchases are equal to the total number of shares. Then if there is a sale in between, we assume that sale ni ya kitambo. So the way it works, it's the share you have bought times the price. The next lot, we get the total value, then the total number of shares, you divide. That gives you the average. And remember, it is inclusive of cost. Current value doesn't include cost. Could you advise someone to buy umeme? For now? No, don't even go there. It's better you regret losing profit than locking your money in. Until that court case is determined, I wouldn't advise. For these other questions, let me not comment on them for now because of time. KCB shares likely to decline after dividend, maybe on book closure, it might readjust with the dividend amount. But again, it also depends on investor sentiment. We invested in KQ where price was 7, current price is that. Is it wise to dispose them and direct that 163 to dividend stock? Just observe the market for some time, you see where the prices are going. Maybe with time, even with one share, it might go up. But I don't think that's a huge loss. It is you to make that decision whether you want to take that hit, move to another counter that is giving dividend. After some time, it recovers that loss. Then you are comfortable now with the new stock. It's all about your emotions. How do you feel? Do you want to lose this 15,000, then you go and pick it from another dividend stock, or do you want to just hold for some time and see if it will improve? But also observe their last performance. If they're improving in terms of profit, then there is a possibility of prices improving. Can I have sold shares directly being deposited on my account for me to buy other stocks trade. When you sell shares, we give you credit immediately. You can use that credit to buy other shares. It is done immediately. There could be some delays because of validation, but it should not take long. From where do I access information on how shares are paid? M-Pesa, check or bank. If it is dividend, when opening account, you give an option where you would want dividend to go. We don't change that until you tell us. If you forgot, just reach out to us. We'll tell you. Just ask for dividend disposal mode. We'll check in CDSE and tell you. Is it possible to gain majority shareholding by buying shares? Yes, that's what Dinyoro did with KPLC. You just come in the market, start just buying. Your work is to buy without, but you're buying in big lots. So what you need to do, research on that company you want to become a majority shareholder, know the portion of holding by each majority shareholder. So those are the people you'll be competing until you reach their shareholding. If you surpass, then you become a majority shareholder. So you do that at NSE. So you continue accumulating shares, and you are not selling. Evans, maybe for these ones, I would request maybe we tackle with our research for now because of time. I believe with that, I want to wind up just to pick up on other meetings. And I want to thank you so much for coming today with a short notice. I actually didn't, I had not planned to do training today, but in the morning I decided let me not let this day go off. We have one share trading, so you need to learn. So this Friday we also have training for international stocks. Then next Wednesday again we come back to NSE training. Thank you so much. Let's meet next time. And you can reach out on my WhatsApp in case you need anything. And this presentation and notes, I'll share those recordings and notes. Be on standby. And when you are going out there, let's go see from one share to wealth. We are not buying one share, we are building wealth. Thank you so much. Let's meet next time.